Hi, everyone. Welcome to the Seattle Angel Conference 27 Demo Day. We're about to bring everybody back from their um, breakout rooms where they've been doing all of their introductions to each other. And while we're waiting for them to come back, we can um, try going to the next slide. Great. And here's our agenda for the day. We're going to be going through the process of talking a little about our context and then going into details of the 6 finalists that we've worked on with a couple of breakout rooms in between. So we have a full day. You'll notice on the side there's a QR code for resources that we've got for a bunch of different things that you might find useful as a angel investor or someone who wants to take angel investing. And so that would be useful. So welcome back, everyone. Thank you for joining us for the Seattle Angel Conference number 27. Here's our basic agenda. You should be able to see, we're going to do a little bit of context setting, and then we're going to go dive into the pitches as we go along, and we'll have several breakout room opportunities. I am reminded that I need to mute everyone so that we don't get extra conversations underway. All right. Thanks so very much for being here. When we do the breakout rooms, it's really good if you've renamed yourself so that people know what role you're in. So like I have Mossy Ventures, Vinay has the SAC thing so that people can find things. Hopefully when you're moving around in the breakout rooms, you have found the breakout button either in the main part or on the bottom part. And we expect that you're going to be moving from room to room as we do our breakout rooms. We've just done a breakout room, so this is a little bit late. But then give people space to have the conversation because, 25 people all in the same room doesn't give an opportunity for people to talk. So please move around and spread out across the rooms when we have breakout rooms. So next. So I'm the founder of the Seattle Angel Conference. And we have, through our work, expanded to doing things in Europe with the Transatlantic Startup Investor Accelerator Program. I also run an open coffee every week as a way of trying to get startups moving in their journey towards being a scalable business. And we're on number 27, so I've been doing this for a while. Let's go on next. Misty, yeah, good. This round we had 669 applicants, which we have filtered down through many pitches and Q&A and reviews to 6 finalists that got due diligence. And today we will pick the winner. We're going to see those next. And so the finalists that we're going to see, you can see in the breakout rooms, the names of these. These are the companies we're going to see in detail today and hear all about what they're doing. Next. I want to talk a little about angel investing since that's what we're doing. In general, I think it's important that people not invest angel in money that they can't afford to lose. It's important that angel investments are not liquid and they take a really long time to come together. One of my investments actually just exited now 16 years after the first investment. It may be that you see a lot of failures in the beginning, and as an early pre-seed angel, it's important for us to be building relationships and supporting those companies for the duration. And our expectation is that you're going to build a 20 investment portfolio, not to think of this as an opportunity to win on one bet, but that you have to build a longer portfolio. And we really think that due diligence matters. And that's what we've just been doing for the last month. So next slide. We really mean due diligence matters. And Rob Wiltbank has some data that shows that it produces a significant difference in your returns. And so part of our goal with this whole program has been to provide the opportunity to get people's hands dirty with learning about how startups work and doing the due diligence. And that goes both for the investors and for the companies that have now gone through a month of due diligence. Next. We've done about 6.3 million deals across all of the investments that we've made inside these programs. So we've had a little bit of impact when you think that each unit is $5,000. So that's, you know, a significant number of people engaging. Next. Specifically, we have about 2,400 companies that have gone through our program, and that includes both the Seattle Angel Conference and the Transatlantic Angel Conference, as well as a couple others like the Women's Conference we ran and the Health Conference we ran. Next. And we've had out of those programs about 822 investors who have gone through, but we've had many that have come back each time we look to have 50% come back through. So we have about 1,300 engagements with investors across all of our rounds. When people join our program, they become members of EBON and also members of the ACA. And so that leads them into being connected more broadly with the broader programs that are running. Next. Some of our alumni have gotten extra excited. For example, one of those you might hunt down when you're in a breakout room is, I think I saw Yoko Kano here from First Row Partners. But all of these groups in Seattle are have come from our alumni getting excited and doing things. Next. We've also helped other places get them. I worked with the Canadians in Kelowna to set up the Okanagan Angel Summit. We also have Misty, who's the head of the San Diego Angel Conference process as well here, and you can chat with her some more in the breakout rooms. And we helped the Alaskans put together the Alaskan Angel Conference. Again, we've done several programs focused on health, focused on women, focused on Europe, and then our main program, which you're in now, the Seattle Angel Conference. Next. Of the 27 rounds, we've invested in 54 companies because we've had some sidecars that have happened along the way. Next. It's important for you to know that this is not us trying to sell you an investment in the company. We're not making an offer. Angel investing is a risky business. You should understand how it works before you get in. And all of the folks that are going through it are learning more about angel investing through this than I can think of any other way for them to learn it. And so we're aiming at the early investor learning how to invest in early pre-seed companies. Next. And I would like to bring Misty up. She's been working with me since 2004 and in many, many different roles. Misty, let me spotlight you, and we'll start using the spotlight if I can figure out how to get there we go. There you go, Misty. If you would like to dive into all of your wonderful skills and stuff and take over the show, that would be great.
Thanks, John. It is really great to be here with all of you today. So I've been hanging around with John for a long time, and I'm eternally grateful to his wife, Martha, for teaching me how to be successful on a ton of things with John. And we've put together some really great programs over the years. Seattle Angel Conference has been around a long time, but before that we did the Willamette Conference together, and also the San Diego Angel Conference, which is a huge success. Wouldn't exist if we hadn't had John down to help us get it off the ground our first year. So really grateful to be here with you. I put on this slide, you can, that code will go to my LinkedIn, but I also put that little tiny URL. If you're interested in attending the San Diego Angel Conference, their finale is June the 5th. And it'll be a great show. It's live in San Diego, but that SDAC guest will get you a half off of the ticket. And we'll see if I can get my mouse to work with the notes. All right. First up, we've got Elaine Werfelli, and she is going to talk us through some things on the data. She is our local data maven. Elaine has been with SAC since SAC 7, so congratulations and happy 20th anniversary here at SAC 27. And Elaine, we're going to turn it over to you.
Great. So let's see. I'm going to share my screen, but first, can you see me?
Yes.
Okay, great. And now I'm going to share my screen and make sure you can see that. Okay, so can you guys now see the slide?
Yes.
All right, awesome. I'm super excited to be here. Been kind of updating the data insights for early startups investing to have information through Q1 if possible. You guys, if you know me, you know I'm a total data geek. If you don't, you'll find out. I'm as a co-founder of an advanced analytic company by day, a angel investor by night, and have taken my 25 years at Microsoft and applied them to both. My goal today is for you to leave with some juicy little tidbit of knowledge that you didn't know before. So let's go. I didn't create any of the original content. These next two slides actually came from PitchBook and is the place now that we can kind of get current / somewhat current angel data. And so here from the PitchBook data, we can see that the US angel deal count has remained relatively flat over the last 3 quarters, but when we take a larger aperture, the year-over-year trend is declining. And the deal value in terms of dollars is dropping as well. One of the things to note is when you look at the round size, there is a record high number of deals below 500K, both by count on the left and value on the right. So in 2025, so that would be Q1, PitchBook is seeing about 75% of those angel deals are under 500K. And now we're going to switch over to Carta as the source, and you'll be able to see a lot more of that background in terms of the what's, the where's, the why's, the how's. And when we look at some of the same trends, but for pre-priced rounds, price seed and Series A, what we see is also in Q1, there is a drop in both the cash raised and the deal count. I'm going to focus my presentation on Series A and below, but where there is Series B and C, I include it, and you can look at that at your leisure. When we look then in a longer time horizon, we're seeing that the number of deals and the cash raised in this Q1 actually hit a 5-year low. Investors are concentrating capital in a smaller population of startups. And in collective, it's less money than they have spent before. Now, Total interesting point is while the round volume has dropped, median valuations remain high and are increasing both in seed and in Series A. And we can see that that trend has continued through Q1. Here on the left, it's showing a 13% increase in pre-money valuations for seed and 12.2 for Series A. And when we take a look and we look back at the trend since that peak time of Q4 2021, it's interesting. This top black line shows that the median seed stage valuations are up 32%. And you go, that's kind of crazy. So what are some of the things that might be driving that? While we see seeds on the left, Series A is on the right, different concentrations within the landscape. So not all the funding is about AI. What we are going to see is that AI has definitely become a major factor across all venture stages. It probably represents somewhere between 30 and 40% of the early stage rounds. And then AI is finding its way into most startup sectors. You can see in here, the deals are in black, the cash percentage and raised is in orange. And this goes across both digital and physical startup sectors. This, again, not surprising, but super interesting to the degree. Valuations, what we're seeing is that they're holding for the non-AI companies, but AI companies are definitely getting a premium. For seed rounds, the premium's about 42%, and in Series A rounds, it's about 30%. That said, there is a significant number of down rounds out there, probably about 1 in 5 1 in 5 rounds in Q1 2025 was a down round. And then when we look at the rounds, what we also see is that bridge rounds are significant. In 2024, both in price seed and Series A, there was about 40% of the rounds were bridge rounds. And what that does is that makes less cash available for those primary rounds. And then when we look at Q1, that percentage has increased. So with investors writing less Series A checks, we are seeing the bridge rounds for seed have continued to grow in Q1 and are now at 46% of the pot. So that's a lot. When we kind of want to peel back the onion and understand why are these bridge rounds needed, what we see is that the median time between primary funding raises has increased because the investors are getting more selective. So we're now seeing a little bit over 2 years between price seed and Series A to Series B, 2.8 years, right? Increasing. And so when we look at all of the different round types, what we are kind of grokking is that these primary rounds should cover not the 18 to 24 months you may have been told before, but probably at least 2.5 years. And when you take a look at this chart, there's a lot going on here. But basically, if you focused on the percentage of companies that have made it from seed to Series A in 2 years, you see that back in 2017, 36% of the companies would have made it in 2 years. And when you look in 2022, only 17% of those companies have made it. So meaning you have to be able to extend that money and get money that will take you for a longer period of time. And one of the other ramifications of that is that we are seeing founders putting off hiring. So first hire, second hire, third hire, that extension is getting longer and longer. So it's not surprising to see that there may be less full-time hires in the early startup ecosystem. Carta did a pretty cool thing, and in looking at the quarter over quarter kind of growth, they took out this wild set of 6 quarters back from the peak and were able to show that when they did that, things on both sides of the peak are relatively flat. And kind of what Peter Walker, who is the head of insights at Carta, is suggesting, and I certainly would agree with that, is that we should have a mindset that we are in a new normal and should not operate as if we are expecting to return to the wild numbers of 2020 and 2021. So when we think about how are some of these investments being funded, what we see over time is that safes have dramatically increased, becoming the primary funding vehicle for pre-priced rounds. And then if we look over here on the left, this is pre-priced rounds in 2024, 86% of all pre-priced capital raises was safes. And you can see how this changes across industries. And then on the right, these are both pre-priced and price seed. It's 64% are using safes. And you can see in some of the lower amount rounds, the majority are still safes as well. And when we look from a geographic perspective, safes are a default instrument for pre-priced funding in just about every major metro area across the US. And so you might be wondering, hey, well, how many investors will I need to fill a pre-priced round? Well, the answer is it depends how big your round is. And so here, the light green numbers are the 25th percentile. The kind of teal colors is that median number. And the 75th percentile is this blue number on the right. And here we have the round sizes under 250K up to 5 million. So even in that smallest round, the median number is 5 and up at the 75th percentile is 10. So this I thought was a pretty good eye-opening thing to say, even in sometimes those smaller rounds, you're still going to need a number of investors to come in for you. When we're thinking about safes, there has definitely been a trend over time to move from pre-money to post-money caps. And the reason for that is that Y Combinator made the default safe a post-money back in 2018. And then in 2021, they changed what their default was from value cap plus discount to value cap only. And you can see that difference here. So in terms of the 83% that is post-money, the majority is seeing value caps only, but there is still a significant amount with value caps plus a discount. When we think about how much, I wanted to share with you this most recent cheat sheet that Carta has created, so you can understand within safe rounds or priced equity rounds, depending on what round you're talking about, what the 25th, 50th, and 75th percentile is. So when we look at median cash raised in a pre-seed round, it's 1 million. And for on a seed, that median is 2.8. But you also have to realize that within each round type, there is definitely a distribution, and it's not one number. So your number could be different than that median. And as you move from price seed, Series A, Series B, there definitely is a more distributed number, and one size does not fit all. And this, I think, is a pretty key takeaway for what we're seeing today. So this number comes from Q4, that 44% of the deals were with rounds that were less than 250K. So that is the largest activity in pre-priced rounds is at that below 250K level. And then when you think about what kind of checks go in that round, the small checks matter. So, there used to be this kind of level that says, oh, I'm not going to take checks under 25K. Well, if you are raising under 250K and you're not going to take checks under 25K, you're going to miss out on what is more than half of what people in this round, how they're getting funded. And you can see all the way down through these sizes that those checks under 25K make a difference in all levels. When we think about where cash raised by startups shows that California represents by itself more than half of the total cash raised, those startups based there. And when we look at metro areas, the Bay Area took 39% of the capital invested. But what that does mean is that there's 61% for all other metros. And you can even see Seattle down there, where we are coming in 5th in SaaS, 6th in biotech, and number 7th in hardware, and number 6th overall as the metro area. When we think about the when are things happening? Part of what we're seeing actually in Q4 of 2024 is a record high number of shutdowns, both for the quarter and for the year. But on the positive side, there is definitely Q2 is the peak of when deals are completed. Thinking about it backwards, when did you have to start those deals for them to be completed and signed in Q2? So we're hopeful that Q2 is going to see a lot of deals happen. And that would come on the heels of a pretty active Q1. So we have had an active stretch of M&A, and that's continuing in Q1, what we see here on the right. On acquisitions where that was not a priced round, it's definitely looking as the highest Q1 in a while. And that is also the same as seed and Series A. So it's looking good and looking for that trend to continue in Q2. When we think about the who, one of the things when we look at McKinsey and Company's diversity wins the 2020 How Inclusion Matters, they were able to show that diverse executive teams are more likely to outperform their peers. And when we think about that, and we see that there is this fantastic positive cycle between angels and entrepreneurs. So 55% of angel investors were previously a founder or a CEO in their own startup. And when you think about that, so it's this fantastic flywheel of entrepreneurs and angels that keep this ecosystem going. And when we do a laser focus on women investors, the Center for Venture Research is a good place to look. Unfortunately, they were not able to have their 2024 numbers updated by the time of this presentation. He apologizes. But it still shows that there is definitely an increasing trend with 2023 seeing 47% of all angel investors were women. And what I think is highly interesting is the fact that there are similar trends between the increase of women angel investors and the percent of entrepreneurs seeking funding who are women. So that the percent of angel investors is on the left, and those founder women companies looking for money is on the right. Then when we kind of zoom out a little bit further and say, okay, those entrepreneurs seeking funding are on the left. Well, what is the yield rate for women-owned businesses receiving funding versus those seeking funding. And you can see there's also a positive trend there. So again, seeing that flywheel work in place, and excited to share that we do have a strong female participation in the majority of angel groups around Seattle, with Seattle Angel Conference topping the list for 2024. So when we want to laser in and look at the startup ecosystem in Seattle, I feel extremely lucky that we have a rich ecosystem, and the leaders and funders in this ecosystem are willing to be transparent and open and share that data with me so that you can see and understand the trend that they are supporting and how they're supporting the ecosystem. So it's important to note when you're looking at different funders that there are different types out there. They focus on different stages in order to invest their funds and how big a check size they actually write. And so here is a view of, for 2024 in Seattle, what across the horizontal axis is the average check size, and on the y-axis is the number of deals. So what we have is the Flywheel Conference down here with representing a small number of checks, but consistent number of checks, and they're a great way for early entrepreneurs to get started. Swan E8 has a bigger bubble because they are right up here at the top, and they have a large number of angels, and they write they do a number of checks, and their check size is probably about, on average, about 120,000. So we have Startup Haven, the Transatlantic Angel Conference, SAC, First Row, Graham and Walker, and AOA, all in this ecosystem of writing checks under 250K. And so if that's kind of where you are in that early system, it's great to get to know these players. When we then kind of open up the aperture and want to see in that Seattle startup ecosystem, let's move that check size up to under $1 million. What we had in our previous slide shrinks over here to the left, and over here on the right, we have Venture Us, Ascend Ventures, Allen AI, and Keiretsu Northwest, leading the charge in those check sizes, which range between 300 and 600K. And then when we go to that even larger check size, what we're looking at is both Madrona and PSL, Pioneer Square Labs. Here, Madrona does have two funds. They have their core fund and their acceleration fund that focuses on different stage. That rounds out what we're seeing for investment here in Seattle. So it's super exciting that we have funders in all those different stages that can help the ecosystem grow right here in Seattle. So just want to recap those top insights for you so you can make sure you're taking away one of those tidbits. So don't be focused on a return to those peak days. Instead, think about what the new normal means. Q1 saw a drop in that cash and total rounds, but median valuations are continuing to be an increase. AI startups are making an impact. They're getting a premium on valuations. Bridge rounds are taking up a material portion of that cash. Median time between funding rounds is increasing, and that's why we're seeing those bridge rounds. Safes are that main funding vehicle that we're getting for those early rounds. Deals smaller than 250 make up the largest portion of what's going on, and smaller check sizes are making a difference. California represents over half, Bay Area over 39% of where capital is invested. Startups are both shutting down and being acquired, so at both ends of the spectrum. A record high number of women founders and women angel investors in the ecosystem. And in Seattle, we have an active angel organization at each funding level, and excited to have some of those angels actually here today. So without further ado, I hope that you were able to take a couple new insights away from what I was able to share today. And now on to the important part of the show, the pitches that you have been waiting for.
Elaine, thank you so much. What an amazing presentation. I feel like I could just spend a week hanging out with you. Yeah, if you want to jump in and use any of the emoticons or any of the reaction resources in Zoom, like please jump in and like let's show Elaine some love. That was really fantastic. Thank you.
You bet. So glad to do it.
All right. Next up, we are going to hear from one of our portfolio companies and one of our investors. We're going to spend the next few minutes sharing a couple of different perspectives. So first up, we have Rich Roger and Akila Tadanada from Zemelgo. And Zemelgo won SAC 16. Let me go ahead and share my screen. They won SAC 16. And we are excited to hear what you've been up to. So we're going to hand it over to you.
Excellent. Hey there. Can you guys hear me okay? Hello?
Yeah, I can see you, and we can hear you.
Okay, perfect. Yeah, I wasn't sure. Anyways, yeah, myself and Akila are on, and yeah, super excited to be a part of this today. I think for us, SAC was back in 2019, so a good 6 years back. Back then, we're a super scrappy startup, and it was pretty cool to just get in front of the conference and sort of get all that feedback and sort of see, where you rank, as a startup. Again, still trying to find your way from a product market fit standpoint, and still trying to make sure you have things at the right level of maturity, from a business standpoint. And so for us, I think Akil and I, the SAC experience was actually pretty tremendous. Met a lot of amazing people, got a lot of great feedback. Built out a huge network, of other angel investors, that could contribute. Ultimately, they helped us get to a seed round with the VC, and then also took a seat on our board as an observer, and basically, just provided tremendous feedback for us. And so, yeah, it's just been fantastic, sort of working with them. Akil, you want to chime in a bit?
Yeah, I mean, I think like Rich said, I don't think we knew a lot about what it meant to raise investment, in those early stages. So what SAC really provided for us was not just, of course, the investment, but then how do you go about it? How do your financials need to look like? How does your pitch deck need to look like? Just all of that. So to me, I think the coaching, and you really don't get that coaching anywhere else. You just show up in front of investors and you have to figure it out on the fly, versus I think SAC was more like a teaching ground for first-time founders to figure out how to go about navigating the process of raising funding. And as I think everybody will learn, building the company and getting revenue is as important as also being able to raise revenue. And some of these skills need to be learned. And the fact that, there's Elaine and John and Martha and all of these guys and, all the great investors that come in, there's a lot that you can learn in the early stages, which helps tremendously when you go to a formal VC and, raise your subsequent rounds. So yeah, I think until date, like we have the SAC community sort of helping us out, cheering us on, and they're always sort of there for any feedback that we might need. So it's not a one and done sort of deal with them. It's, they're sort of with you throughout the journey.
Yeah. And I would say, yeah, since SAC, we've raised basically like another $7 million. And yeah, we just recently passed, 200K in MRR. You can see some of the logos there. Yeah, we're starting to like fully spread our wings. This past year, we deployed at Rivian, Nissan, Daimler Truck, Lucid Motors, also have, Amazon Air as a customer. And so again, all this was really, sort of, it really, I think SAC was that springboard, to really get us off the ground and sort of get us, to the point we are today. And so, yeah, definitely really appreciate it. Any questions or?
Thanks so much for sharing. It's really great. What do you see on the horizon for the company for the next 12 months? What's the most important thing that you're working on right now?
Yeah, I think for us, so Zenelgo is an ecosystem sale, right? And so we're a hardware software solution, and we partner with a company like a Zebra Technologies or an Impinge, like on the sensors, and then they have system integration partners, that are out there, knocking on doors and sort of getting us, in front of some of these big customers. Um, like I think for Killina, like AI is the next big, sort of opportunity, I would say. And I know everyone's not familiar with Zenelgo, but we're sort of like a data collection, type of solution where we're crowdsourcing data, from the entire factory, from raw materials, to work orders, finished goods inventory, shipments. And so we probably have actually the most data in a factory of any other vendor out there. And so now the opportunity for us is, how do we start to power like agentic AI and help customers, sort of automate, some of the decision making going on in the factories. But yeah, this is just a massive, massive opportunity. As everyone knows, the U.S. is reshoring a good amount of our supply chains, and we're seeing that firsthand. And it's yeah, super exciting to be delivering technology like into manufacturing. But again, I think AI and again, I'd say also just making tech easier, right? We have a non-technical end user, on the factory floor, and so we're just constantly making our solution as easy as possible. Again, we talk about like Google Maps and DoorDash and Find My iPhone. Yeah, how do we give factory workers that same type of super simple experience on the factory floor?
Fantastic. Thank you so much for being here today. It's great to hear from both of you and know that things are going well. So congratulations on that. Next up, we have, we're going to hear the perspective from one of our investors. And it's my pleasure to introduce Evan Poncelet. Evan, I'll turn it over to you.
Yeah, that's great. That's me. I'm Evan Poncelet. So I run Venture Black, which is a nonprofit, the largest one in the Pacific Northwest that caters specifically to Black founders and investors. We are over 350 members as of recently. And so we started off as an angel network so we started off originally, Jesse Posey and I, as SAC 23 Angels, and we decided we might try to fix the broken situation with the supply side of capital for Black investors who are currently sitting just at 1% of angel investors. And then pre-seed stage founders only get 0.4% of early stage funding. So we set off to start an angel conference similar to SAC with a slightly abridged model looking at what First Row Partners had done with their ensemble fund to see if we could, in 6 or 7 weeks, get some kind of funding and distribute out to companies. And so we were able to do that last year in June, and we allocated to the company that actually won SAC that year, Doppel Technologies, which has a telerobotic ultrasound company, and then also the credit repair app out of the Los Angeles region. We just this last Saturday completed our second round, the DreamWord Event Fund 2, which, and I'll explain the DreamWord Ventures bit in just a bit here, which allocated to Winx Therapeutics, which is out of Miami, that's doing drug discovery around RNA-based therapy to cure type 1 diabetes that has applications in type 2 and also oncology. And then took another investment in a company, Kahek, which is a marketplace for nurse preceptors, which is really exciting because colleges can only take in as many nursing or healthcare students as they can actually provide with experiential learning through clinical rotations. And currently that's all done with spreadsheets and handshakes and a bunch of political animosity. So getting an Uber for your preceptorship when you're trying to get into imaging doctorhood or being a nurse is something that can be pretty important for folks. So my LinkedIn, John has generously dropped in the chat there. But we've been having a great experience. We're looking like we might do another round this year in November. But then to that end, one big thing that we see as a deficit in the Pacific Northwest is there's not too many investors that are leading rounds. And so as Elaine mentioned with the data of the average or I think median angel check dropping below 250K, that's not going to get it done for the pre-seed. And we find that Black founders spend a lot more time raising their capital. So we have the ambition with DreamWord Ventures, which is a pre-seed stage fund, to lead one round in our fund one. So we're getting that all off the ground, and it's looking really promising. So that's all the news that's fin to print from me. And so thank you so much to John and Elaine and everybody at SAC and Elizabeth Cross, Nicole, very important people and faculty people helping me get this stuff done.
Very good. Evan, thanks so much for being here today. It's great to hear these kinds of updates and see how much work's moving around in the region. We are getting closer to our main attraction, but before we start with presentations, I want to invite the SAC7 leadership to give us a recap of SAC7 and catch us up on what's happened so far to bring us to where we're at today. It's my pleasure to introduce the SAC27 SPD organizers, Sudhir and Prashant.
Oh, wait,
Hi,
come up.
everyone. This is Prashant here. I'll walk through this slide and hand it off to Sudhir as he presents the next slide on what we're doing. But what I wanted to cover here was, wow, it's been a rapid fire 16 weeks for all of us here. We started this whole journey of SAC27 in February, and essentially we have filtered down 69 applicants, as John had mentioned up front, down to 24 quarterfinalists, and then to 12 semifinalists, and then 6 finalists over the last 10 weeks. And there were some heated debates across the board and contentious, like strong voting patterns that we saw even to get to the 6 finalists that we had. But that's the nature of how SAC operates. Subsequently, over the last 4 weeks, what we've done is we've had 6 teams that were divided into that we had deep due diligence that was covered for all of them. And the 43 investors that we have as part of SAC 27 are actually part of all of these due diligence teams. So this may be new to some of the listeners here, but essentially we try to go for a 50-50 split in terms of new investors versus alums. And that's what we have in the SAC 27 investor pool as well. 22 new investors, about 21 alums who are part of the investor pool. And it's extremely diverse, right? So we have engineers, we have bankers, we have entrepreneurs, we have former investors who have been entrepreneurs before, lawyers and healthcare and finance leaders. And this diversity of thought is essential to identifying the right bets for the whole cohort as we go through the investments here. Now, key to note here is all the investors were split up into each one of the 6 finalists. And there was one particular role that was also defined, which was the DD lead. So essentially, the due diligence lead is the person who is responsible for creating a document, which is the investment memo for that particular company that the team is researching. And so it's almost like, to Evan's point of, hey, we don't have lead investors coming out of the Seattle region. The DD lead role is kind of a training ground for some of those skills that are needed to start finding deals and then raising funds for all of them. And during the due diligence process itself, this is kind of the quest for the investment thesis, right? This is where all of us were challenged to identify what our beliefs are, what our investment approaches are, and then challenge them against other folks who have different opinions, and then form an opinion that kind of works with our belief systems and our value systems. Through the due diligence, we also ended up doing deep research with the founders and each of the companies, essentially looking at a couple of these areas, right? How's the founding team? Are we having references from customers and other sources for the company? Evaluating the market, evaluating the product and the solutions, evaluating the operational capabilities of the teams, and then the financials. And there's an other bucket also, because each of the companies that we have evaluated is unique in their sense. So there's definitely a variation of the areas that we evaluated risk on, finally to come together to whether we would recommend investing in this company or not. So I want to thank everybody who's participated through this journey. And with that, I will hand it off to Sudhir to walk us through what's going to happen next in terms of the demos for each of the companies.
Thank you, Prashant. Very well said. Can you go to the next slide, please? Yeah, first of all, as Prashant mentioned, it's been a long, arduous journey for the last 16 weeks across both. Across both investors and also the companies, right? And kudos to companies who have come to finalists, INI Bioscience, Wisdom Labs, Drive Hockey, Trust Health, Emerald City Labs, and Khalil Health, right? They've been sticking to us for 16 weeks, and due diligence team knocking their doors almost every single day for the last 4 weeks. And thanks for all the patience that you have given us and all the details that you have given us to help us generate a very detailed due diligence report. On the flip side, again, kudos to all the investors for working through the company's triaging and getting to the due diligence part and finally the demo day, right? So what will happen next again is each of the company will go for about 10 minutes. For 5 minutes is about the presentation, and the due diligence lead is going to walk through what their experience has been and some of the last remaining questions. And then we'll finally go to now voting and see who the winner is. Excited to be part of it. Next slide. All right, first off is Emerald Batteries and David Bell. Get started. Can go to the next slide. Next slide.
We'll let Misty take care of this, Sudhir.
All right.
Thanks very much.
All right, thank you so much. It's always amazing to see how much work happens in such a short period of time to be able to get to this place. Just as a quick recap, we're going to hear each company. First, the company's going to present 5 minutes on their pitch. Then you're going to hear from the due diligence teams, and they're going to give you like a 5-minute overview of their discovery process. So first up for today, we have David Bell with Emerald Battery Labs. David, we're going to hand it over to you.
Thanks, Misty. Do you mind enabling sharing? Okay, great. Can everyone see my screen and hear me all right?
There you go. Yes, we can.
Okay. Well, thanks again to the diligence team. I'll kick it off now. So I'm David Bell. I'm from Emerald Battery Labs. Emerald Battery Labs is revolutionizing sodium-ion battery technology. Lithium-ion batteries are not safe enough and they're too expensive. They're too dangerous for data centers that need a large amount of backup batteries, and they're too expensive for electric vehicles. Just look at how much money Ford and GM are losing on every single vehicle. But Emerald Battery Labs will reduce battery costs by 50% with sodium-ion batteries. Why are we focused on sodium? Because the feedstock for sodium is 100 times cheaper than the feedstock for lithium. Sodium-ion batteries are inherently safer, and they use an existing US-based supply chain. But when we talk to customers about why they've not implemented sodium-ion batteries, one problem remains, which is energy density. How much energy per unit weight or volume? Emerald Battery Labs is developing proprietary materials to solve this problem. Our materials are significantly higher capacity. They're a drop-in for existing battery manufacturing, and they're made using inexpensive and widely available precursors. We're part of a rapidly growing market, more than $350 billion of TAM, and we're still growing anywhere from 10 to 20% per year. On the go-to-market side, it's really with specific strategy that we're focusing on data center backup batteries and automotive starter batteries first. We have a crawl, then walk, then run approach. We want to run in the largest markets that take the longest amount of time to get through their qualification process, but we need to start with our beachhead market, which is data center backup and automotive starter. We group that market into what we call lead acid replacement because those two markets currently use lead acid batteries, and we think they're primed for replacement with sodium-ion batteries. We think we'll commercialize there by 2027, and that sets us up for success to get to our larger markets in utility batteries, commercial vehicles, and passenger vehicles. Emerald Battery Labs is positioned as a tier 2 supplier. That means we generate most of our revenue from material sales to battery makers, who then provide those batteries to OEMs. We also generate revenue via commercial partnerships for manufacturing or joint development agreements. And just to double click for a second into commercial partnerships, because it's a really key part of the Emerald Battery Labs story, we need commercial partnerships because we think we'll get to market faster and will remain capital light. The types of commercial partners that we think about could be upstream suppliers like Solvay, there could be battery makers like LG or Panasonic, or even car companies like Ford and GM. And we're talking to all of these guys across our entire supply chain for commercial manufacturing partnerships. We're primed for rapid growth. We have our research infrastructure in place. Because we're Seattle-based, we're working with University of Washington at both Co-Motion Labs and Washington Clean Energy Test Beds for battery development. On the macro side, The largest battery makers in the world are all proving our thesis because they've come out and said they expect to replace most of their existing product portfolio, which is lithium-ion batteries, with sodium-ion batteries. We have letters of intent from the leading executive at Renault for a technical and commercial joint development agreement, and from Group 14 CEO for a strategic relationship. And that's just some among many. Over the last month, as we've been going through diligence, we've made a lot of really interesting traction. We synthesized our first materials. We submitted non-dilutive opportunities via Department of Defense specific to sodium-ion batteries. We've secured 7 letters of intent so far, and we're expecting more. They indicate interest in our solution, confidence in our team, or even strategic investment. And we've added a technical pioneer in sodium-ion batteries to our advisory board. We have a founding team of battery industry veterans. We know what it takes. We've had failures, we've had successes, and we know what it's going to take to drive Emerald Battery Labs to the finish line. Our advisor, as I mentioned, is a pioneer in sodium-ion batteries, has reviewed our technical approach, and believes that we're taking the right path to meet our goals of improved energy density. So just to summarize Emerald Battery Labs' roadmap to commercialization, we need to get to market fast, replacing lead acid batteries, and then dominate current lithium-ion battery markets with sodium-ion batteries. We'll get to data center backup batteries as soon as 2027. That will sustain us through utility battery launch, commercial vehicles, and even passenger vehicles. We expect to generate first revenue around 2026 via joint development agreements, in 27 via material sales that will come from our pilot line. That will sustain us through to be a $1 billion sales company by 2031. On the exit side, we think the best opportunity is in the 28, 29 timeframe after we have our first sales and when we're formally in products. Happy to take any questions, and thank you for your time.
Thank you, David. We are now going to invite Emerald Battery Labs due diligence lead, David Busby, to give the due diligence report.
David Busby.
Yes, I'm here. Should I take over the slides, or does
Yeah, we need to go back. Misty, we need to go back to the slides. David Bell, you need to drop your slides. Next slide, please. No, that's right. That's right.
No, this is it. Yeah. So myself and my team, Ashwin Tiger, Aman, Ajay Gopi, we went through a load of the documentation that this team sent us. And also thanks to this team for being very responsive when we were asking them to get the files into us, answer questions on things like this. This was my first go as the lead on a diligence process, so there was a little bit of a learning curve for me, and I think there was a little bit of learning curve for other folks on my team, and it took more time than I think anybody really expected. We did spend a lot of time digging on the technology around this company. They are, they're pre-revenue, they're sort of pre-product. Well, they're really pre-product, and so their founder Chell is, the material scientist. We had a lot of questions for him. And also when we had a meeting with Martha, one of the advisors, and that meeting spent a significant portion of the time talking about, are these material improvements to sodium ion batteries possible? And we have walked away with the conclusion that, yes, it does seem to be something that can happen, but nobody on my team was a chemical engineer or, advanced in material sciences. But Marka, very enthusiastic about it. Chell seems to know what he's talking about. It has years and years of experience with that. And then some of the letters of intent, or even meeting with Rick, the former employer for folks on this team, everyone is very enthusiastic about the team, and sort of, even if our diligence team cannot understand the technology, we can definitely understand this team. Like, these folks work together. They have worked together in the past. They appear to work very well together with what we have seen. so far from them, and have the experience not just working together and working at another company, but in those roles, bringing products to market and getting that thing out the door and getting revenue in the door. We also did some research against the numbers they quoted us regarding market size. General research across the internet, motivated interneting, discovered similar numbers to what they quoted. And we did spend a significant amount of time, I think, also in the diligence team. When Emerald first showed up, their messaging to the investor was very centric on the battery in the electric vehicle, because this is the largest and most visible battery that folks can see. And we spent some time pressing them, like, well, how do you get the money early? And they said, oh, it's lead acid. So we've helped them refine that message so that we can show, here's our early revenue through this lead acid plan, which turns out there's loads and loads of these batteries all over the place as well. And so that plan, starting with lead acid, also appears viable. I don't know what else to say about this. We did summarize, I think I'm supposed to say it, that we did, and we do think this is an investable company, but we should all be very, very clear that this is a significant research play. So be ready for that.
Thank you, David.
Yep.
John, did you want to say something?
I was going to ask him if there were things he wanted David to explain in any more detail. No.
Oh, well, I was gonna, is Chell here? I didn't see him, but if he's here, it would be rad to have a few words about the test matrix of sodium ion and moving in that direction.
Yeah, I'm here, David.
Oh, fantastic. Chell, would you, in like 1 minute, explain the process for discovering the right recipe?
Yeah, I think that's we had a really good conversation with Mary yesterday, and I think that was a great way of framing it. So the basic science has all been done. We're not trying to find out if we're breaking the laws of physics or breaking the laws of chemistry. What we're really doing is going out and applying research and applying the engineering that we know how to do best, and going and applying that knowledge to developing the materials. When you ask how much improvement is possible, we've based our sort of techno-economic analysis on sort of a middle path. So not the most wildly successful and not nothing's going to work. So how much improvement is possible? We're really optimistic. This is kind of like lithium ion in the 1992. And if you were to open up that battery and look at the materials in there, it'd be very different than what a lithium ion battery is that you would buy off the shelf today. And why is that? It's because people have been working away, changing the material set and improving it. And we know what lessons to apply from the last 40 years, lots of different chemistries. This team's gone out and done it in other products, in lithium ion and in iron air batteries, in solid state batteries. And we're going to do the same thing in sodium ion, and we're going to absolutely dominate and crush the market.
Thank you. And then two questions probably back to David Bell. Getting more LOIs in the door is really good. What can we do? How can we get more actual deals in the door past the LOIs? And then I saw it on the slide there where you were talking about these 2 exit opportunities. If you could say a little bit more about that, but quickly, please.
Yeah, of course, no problem. So I think the LOIs are a great first step. Just to give a little background, we have a lot of experience closing deals in this space. Like I personally managed multi-million-dollar JDAs for Porsche and LG and Renault and many others. So we know the game that we have to play here. We're not going to close offtake at this stage because, like you said, we need, and like Chell said, we have to finish developing our product. But we do know the game we have to play in order to actually close those sales and close that funding. I mentioned in my last slide, 2026 is when we think we will get revenue via joint development agreements from strategic partners. And those will likely be lead acid battery companies or folks that are in that lead acid battery space. And then on the commercial partnership side, that's going to develop over time. Those will be larger deals for larger mass production. And then on the exit side, I also put on that concluding slide, to me, the best exit scenario and maybe not the earliest one, is 2028 to 2029. That's post Series A. That's after we have a pilot line. That's after we have revenue via joint development agreement. That's after we're in products, have revenue via material sales, and Emerald is set up perfectly to either raise capital for us to go to absolutely massive production or get a partner to go to mass production. And that's going to be the key motivating factor for that 500 million plus type exit. We could have a deal sooner, but we think that's the best deal that's going to be on the table.
All right, thanks very much, everyone. That was Emerald Battery Labs.
Thank you, everyone.
Good to have you here. Next up, we've got Adam Nathwani with Drive Hockey Analytics.
Hey everyone, you guys able to see my screen?
Looks good.
Great.
Yeah.
Hey everyone, I'm Adam with Drive Hockey Analytics. Drive is a sports data company building smart arena technology. Now, I'm sure we've all seen how data has transformed sports, changing the way that athletes train, the way that teams prepare, even the way that fans consume sports. But sports analytics technology is largely built for the pros. It's expensive, it's complex. Fundamentally, it's impractical for amateurs, which means millions of athletes at the amateur ranks are forced to rely on gut feel and outdated methods to support their athletic development, despite spending tens of thousands of dollars each year on training. The biggest irony is that youth and amateur levels are where athletic development matters most, and yet they have the least access to the tools that actually make it possible. Drive has built smart arena technology that brings professional-grade performance analytics to amateur and youth sports. We've developed sensor-based systems that work in any ice rink, automatically capturing high-resolution data on every moment, every play, and every shift. What was once reserved for NHL teams are now accessible to every athlete, parent, coach, and scout, specifically designed with the amateur athlete in mind, where ease of use and affordability are key priorities. We leverage our proprietary technology to deliver better data at a fraction of the cost of traditional systems. This is what allows us to take a pro-level concept and bring it down market in order to capture the massive youth, amateur, and even recreational sports markets. Our system installs in minutes, can move between venues, and delivers more accurate data than anything on the market, with 10 times the data precision at 80% lower cost. This isn't just watered down tech, it's purpose-built for the 99% of athletes who are currently underserved. And our data touches every part of the sport. Players and parents use it to guide development, teams use it for coaching, scouts and agents use it for evaluation and recruitment, media uses it for storytelling, and leagues and ice rinks use it to differentiate and drive new revenue. We're not just simply selling sensors, we're becoming the data backbone for the sport. And while we're starting with hockey, we see an easy transition into other sports because our sensor technology is sport agnostic, which means we can turn any ice rink, basketball court, baseball diamond, soccer field, or any other playing surface for that matter, into a smart arena in minutes, tapping into a serviceable market with over 7 billion in ARR potential. We're collecting the kind of data that applies across human performance, positioning Drive at the intersection of sport, health, and AI. Now, Drive is a data company first and foremost. We only built cutting-edge sensors because nobody else could get us the quality of data that we needed. And now it's become a strategic advantage, enabling proprietary data and AI while creating stickiness with our customers. We take a partnership-based approach with the industry, where we partner with leagues, ice rinks, and other hockey service providers to acquire their athletes under a profit share. And we have dozens of these partnerships in place and in our pipeline. We then charge on a usage basis to players, parents, and coaches to access their performance data. The collected data can then be aggregated and sold into secondary markets like scouting, media, and various fan applications. We're able to take every tracked event and turn it into a monetizable asset. And as we scale, so do our margins. And we're already seeing strong traction. We have a product in market and we're approaching 650K in MVP sales. We have a growing user base and arena network We have partnerships with top leagues across North America. We have an extensive IP portfolio, and we've participated in 3 sports-specific startup accelerators backed by major sports brands like Sport Radar and Maple Leaf Sport and Entertainment. We've proven that we can deploy, scale, and monetize even with an MVP level product. On top of that, we have an all-star team with hundreds of years of collective experience in elite and pro level hockey, as high as the NHL, and a track record of success scaling 5 previous startups, including in sports data. We have strong experience in product development. We have deep networks in the sport at all levels. We know this industry inside and out, and we're the ones to make this vision a reality. And others agree. We just signed a strategic partnership with the largest ice rink operator in Canada to integrate our technology into their ecosystem of ice rinks, leagues, training programs, and events, servicing their 70,000 athletes, expected to generate over $5 million in annual recurring revenue when fully deployed, expected within 3 years. Now we're raising $1 million seed round to deliver on this opportunity, as well as others that are on our doorstep, to enhance our product and to build out more IP. So if you're interested in backing a company that's not only built a better product, but is also leveling the playing field for millions of athletes, we'd love to have you join our team. Thank you very much. Again, I'm Adam with Drive, happy to answer any questions you may have.
All right, thank you, Adam. That was great. Next up, we have Matt Wolodarski, who is going to give he's the due diligence lead and is going to give the report for Drive Hockey Analytics.
Great. Hopefully we can get the slide up. I'll just share very quickly a high level of how we engaged with Drive Hockey and conducted our due diligence. We had regular and ongoing touch points with Adam and the team. We talked to hockey operators, arena operators, coaches to learn more about the product. We met other members of the team, so I feel like, yeah, very deep in the due diligence, of course, reviewing all of their documentation, and the team has been great to work with, very responsive, and yeah, exciting opportunity for sure. So the areas that we explored, I'll walk through that on behalf of our team. One of the key areas was really understanding the problem that Drive Hockey is solving. And as Adam put it, it's really about democratizing access to performance data for the junior and youth markets. And, you know, as an interesting side note, when you speak to the team, some of the founders, like, they have lived through this experience of these youngsters, these non-pro players, not having accessible data like this to really improve their performance and their skill development. So you can really sense that real mission behind what they're doing. And Adam also, as he touched on, how this data can be resold in different avenues and made actionable, not just for coaches and for players, but for scouts and arenas and media companies. So some optionality there. From a market perspective, yeah, one of the things that really stuck out for us is they, you know, I think done well with this beachhead of elite amateur hockey players. And proof of that is in the feedback that we heard, as well as the revenue that they're driving at a $374,000 annual revenue run rate, 3,500 users, and growing. And then, of course, the CanLand partnership, which happened during the due diligence phase. So it was exciting to see that as an endorsement and a real accelerator potential for their business. At the heart of the product, we did go deep on that, of course. We asked them all sorts of questions. They were very patient with us. They gave us a demo, which was really helpful. And I love how Adam distinguished, hey, we're not a sensor company. That's an enabler for providing this great data platform And that's really the heart at what they do, delivering potentially SaaS model type economics from a financial performance standpoint. There's some real depth to the data that they are providing. I think over 100 data signals across 3 core areas. A lot of depth and research and expertise about hockey has really gone into delivering the right analytics. And then from a go-to-market perspective, I think they've been very strategic, obviously, about going after this first market of hockey, which all the founders and many of the team members to really come out of that hockey world, that hockey community. They've started with pilots and portable systems, and now moving into permanent placement in these smart arenas. We think can be a real accelerator. Yeah, we met with the team extensively and did separate interviews, and yeah, we again think they bring real strong domain expertise, execution experience. There's experience with other ventures and other related areas of this sports analytics related market. And they really bring hockey credibility with startup and technical depth. There's some clear exit paths with a number of different types of potential acquirers. We did speak about Canlan as a potential acquirer. They're clearly sold on Drive and betting on the company. And yeah, there's a real opportunity for them to diversify their revenue stream. So that could create a potential acquirer. But beyond that, there are some incumbents in the space in sports analytics, not in amateur hockey per se, that may view Drive Hockey as a way to get into that market. Yeah, so those are some of the discussion areas. In terms of these remaining questions, I probably would position them as, like any early stage investment, some of the risks that we discussed. There were some mitigation plans that they shared with us. So let's have that discussion, Adam, now a little bit so others can hear from you directly. The first area is, yeah, as you can see here, can Drive Hockey turn its early traction into a 10x outcome, expanding across, there's multiple areas of optionality, adjacent sports, up the hockey value chain, and potentially into new geographic markets, as I know you're starting that effort in Europe.
Yeah, that's right. So basically our expansion is kind of a 3-pronged approach, geographically, vertically within the sport of hockey, and then thirdly into other sports. So we're kind of focused on North America right now, but we do have distribution channels into Asia, and we actually just recently, last week, signed a deal for distribution within Europe as well. We are pretty collaborative with the industry, and we work with many companies, including European companies, and we've discussed kind of distribution partnerships on that front as well. Within sports, there are secondary markets that we touched on: scouting, media, other fan applications. Those have largely been validated. On the scouting side, we've personally spoken to half of the NHL teams who have expressed a strong interest in the type of data that we have for levels of hockey that they primarily scout and recruit and draft from. We actually have a list of 15 that have signed up for priority access to this data for certain leagues that we're in discussion with, that this data and these league deals don't even exist yet. That's how much they want their hands on this data. And then getting into other sports, I mean, we're kind of focused on hockey right now. I would say, hyper-focused because that's kind of the world that we've come out of. But we're already seeing some interest into other sports. Figure skating and speed skating are kind of a natural progression. We're actually working on a pilot with Skate Canada, which is the Canadian governing body of figure skating, to work on some pilots with them. But we get inquiries around adjacent sports to hockey as well, lacrosse, field hockey, and similar. We're just not in a position to kind of deviate from our plan of hockey right now, but we do see a lot of interest. And similarly, the challenges we see with youth hockey, we see with youth, youth volleyball, youth basketball, and so on and so forth. So I think we have a pretty good plan of how we want to tackle our expansion, but for now we're hyper focused on hockey and performance, player development performance to start, and then looking at secondary avenues within hockey, and then getting into at least adjacent sports from there.
I have a quick question. How do you guys connect and collect this data?
No, we're gonna keep the questions to the breakout rooms and
Oh, okay,
actually
sorry
we're
about that.
we're at the ends of our time slot here, so we're gonna have to move on. Misty?
All right. With that, I'm going to say a thank you to Adam and Matt. That was Drive Hockey Analytics. One more company we're going to hear from, and then we are going to go to a break. So next up, we've got Dragona Savic with INEA. Dragona, we're going to hand it over to you.
Thank you. I cannot share my screen yet, so if somebody can pull down. Thank you. We are INEA Biosciences, and we're revolutionizing the treatment of inflammation. Psoriasis is more than skin deep, causing both physical and emotional consequences. And current treatments range from messy creams to treatments carrying serious side effects like biologics that can cause skin cancers. 75% of patients actually avoid systemic drugs due to their side effect. But without a systemic treatment, these patients will develop, 50% of them will develop costly conditions like heart disease. And this costs the healthcare system a lot of money. In a survey conducted by us, we actually have shown that 80% of psoriasis patients are eager to try a new treatment. And 73% of patients are even willing to pay for this kind of treatment. The market is huge, and our beachhead is focusing on the moderate and severe patients with psoriasis that are unsatisfied with their current treatment. And to address this market, we at INEA have developed a non-invasive wearable ultrasound device that can precisely target a region of interest with millimeters of accuracy, lower systemic inflammation without the side effects. Our device uses gentle ultrasound waves, like the ones used for pregnancy scans, to stimulate the spleen for just 5 minutes a day. We focus on the spleen because it houses most of the immune cells. And this approach has been studied since the 1990s, and it has shown strong anti-inflammatory effects, both in animals and in humans. And we are the first ones to apply it to psoriasis. You might have heard that a lot of drugs fail when they're moving their testing from animals to humans. But we are very lucky, as anytime we've been targeting the inflammatory reflex and therefore targeting the nerves, all the studies have been shown to be translated from animals to humans. And this is hugely de-risking your investment. And that is why we are so excited for our first in human studies. Why? Because we already have shown incredible data in animals, both efficacy and safety. And we are almost sure we're going to show positive results in those first in human studies. In addition to that, actually, the FDA called us to ask for a early pre-submission meeting where they recommended a STEP program. This means that we will be allowed more support from the FDA throughout the process that can accelerate our path to clearance. We also signed a major pharmaceutical deal that is bringing support both financially and in other aspects for our upcoming first in human trial. Strategically, we have filed our IP on the hardware part, but also on the method of use for psoriasis specifically. And this is blocking any incomers that want to use ultrasound for the treatment of psoriasis. We are the only immune modulation solution against psoriasis. But when you look at other competitors that are targeting the inflammatory reflex, there is a lot of them that are actually invasive, and most of them are treating rheumatoid arthritis. I am so proud of the team that we have put together. My co-founder, who's here with us today, it's an MD PhD with expertise in neuromodulation. We recruited Maria Sala Barriga from MIT as our first hire to lead our regulatory and quality. And I'm a biomedical engineer with a PhD and an MBA. Where we have gaps, we have advisors to cover these gaps. And today we both have Brian Wagner and Keith Williams with us in the audience. As future investors, I want you to know that we are laser focused on psoriasis as a first indication. But long-term, this vest has the opportunity to be a platform technology, as our patents are already protecting us for this. And we can tailor our platform for other inflammatory-related diseases like cardiovascular, arthritis, and even cancer. In the next 6 months, we will start and finish our first-in-human study, apply for the FDA STEP program, and have a complete data package ready for our pharmaceutical, positioning us for our first exit this year. When we look at the full timeline, we actually have an additional 3 other exit opportunities ahead of the FDA clearance path. So the timing couldn't be better. We have strong data, FDA is excited, our humans are only a few weeks away, and the first exit opportunity is in 2025. Join us ahead of the human study to make a real impact. Thank you.
Thank you very much. We are going to go over to your due diligence lead, Hannah Bryant. So Hannah, we're going to hand things over to you.
Wonderful. I'm all set once that slide is shared. And I just want to make sure to honor the time. And so you all received our due diligence report and you can read this slide yourself. I'm not going to go over each of the individual bullet points, just want to very quickly say we had an opportunity to spend a lot of time with Dragana as well as her team of advisors, her co-founder, and found them exceptional. Also, one of our team members was a dermatologist through her life and had a network of people that we were able to do outside research with as well. One of whom was really excited about Dragana, had known her from the past and known about this company and had offered to kind of support as they move towards human trials. And so I'm just going to hand the time over to Dragana because I want to give as much time to her as possible to share about these remaining questions that we have on the screen here. So Dragana, can you share with us what results are you most excited about in your recent animal trials that just recently were finished?
Thank you, Hannah. Yeah, I am really excited about our recent animal results. First, we see very clear dose responses similar to what drugs can do, but with ultrasound. Secondly, we see a suppression of the same markers that are very expensive drugs in today's age, but without the side effects. And third, we have a multi-targeted approach. So not only do we regulate one pathway, but we can regulate multiple parts of the immune system, something drugs have never been able to do entirely. But what's most exciting is some of the data we got in only 9 days ago, where we show that the harmful immune cells are reduced, but actually the protective immune cells are elevated. That means that the body can still fight off any infection, even when they are on our device. And this is something drugs cannot do. And this is a major breakthrough in immunotherapy.
Awesome. Thank you, Dragana. Hey, we got a question from a SAC investor who wanted to know whether or not you have yet tried this product on humans. Can you explain for us the regulatory and ethical research pathway that you are pursuing and why?
Yes, so thank you for that question. No, we haven't tested this in humans yet, and that is because ethically and legally we cannot do that on ourselves or anyone else without formal approval. However, that said, we're confident in heading into our first in human study where we actually have submitted the ethical protocol already. And I want to point out that because we have these animal data and other people actually have shown the translation from animals to humans, we are very positive that this will work. The FDA pathway for us is a class 2 de novo application. And because we can apply for the STEP program, we will actually be able to get cleared within 2 years.
Awesome. That leads us nicely into the next question. Can you clarify the FDA's feedback around STEP, Safer Technologies Program classification?
Yes, absolutely. So first, I wanna share that we were very excited to make our first pre-submission. It was very early stage for a company to make this pre-submission, but we were it was a good outcome because they actually called us and wanted us to schedule the meeting immediately to actually get to know the technology. And during these calls, we had a very excited lead reviewer that was a dermatologist who expressed this technology to be, and I'm quoting, cutting edge. This is really exciting to hear when it comes from the FDA, especially since we are ahead of full engineering development. But they did recommend for us to apply for the STEP program, which is the safest technology program. So this shows you already that we are much safer than any other technologies for something like this, and they're excited. And that means that we will be able to have touch points with the FDA already as soon as we submit that STEP submission, which means that we will be able to incorporate their feedback in our hardware development, which also will accelerate our path to clearance.
Excellent. Thanks, Dragana. You've outlined 4 potential exit paths over the next 24 months. Which one of those do you currently see as the most likely to happen and why?
Oh, this is a good question. So we see 2 of them to be most likely to happen, actually. So because the data has shown such promising results, we are very, very excited about this first-in-human study. And we know that the data package we're going to deliver to the pharmaceutical, they have obviously expressed interest in it, and they have also planned the clinical study together with us so that they get access to some of the data that they really want to target within them. So I believe that following this first-in-human study, which is very short, we have a very lucrative opportunity for an exit. But also, if we should have them as a lead investor at that point, because they can also become a strategic investor at this point, I think the most likely exit opportunity is within 1 year of development of the hardware.
Okay, thanks so much. Final question. If awarded funding from SAC 27, how would you allocate those resources? What milestones would that unlock for you?
This is a great question. So this is really, really, really important to us because we already have made the IRB submission. We're about to recruit those patients as soon as we get the approval. Most of that funding will go into executing this first-in-human study and delivering the best data package we absolutely can for this pharmaceutical. We'll be able to collect much more data and much more qualitative data as well in order to bring that exit home.
Awesome job, Dragana. Thank you so much. We appreciate your time.
Thank you. Thank you. I appreciate all of you as well. Thanks for a great experience.
Fantastic. Thank you both. You can start to see now the difficult decision that the investors have coming up ahead of them after we've just seen just the first 3. We are running a couple minutes behind schedule, so I think maybe we can make some of that up during the break, but John will tell me it's back or not. John's going to go ahead and open the breakout rooms, and we've got a break. So we'd like to be back at 5 till 5, if that works for everybody. John, is that still acceptable?
Yeah, that's fine.
So,
Yeah.
so grab a quick drink or a bio break if you need it, and then the breakout rooms will be open, and you can work your way through those. If you just right click on your leave the room, it'll give you an option to go to another breakout room if you'd like. So please move around and get to know each other or get to know each other better. Welcome back, everyone. I hope you had a great break, made some new connections, or reconnected with some people you maybe haven't seen in a while. We're going to keep moving right along in the program. So we're halfway through. Looks like I've got some things pop up here. We're halfway through, and next up, we are going to see Andrew Cottrell with Khalil Health.
Can somebody enable my share, please?
Yep, go.
Got it. Thank you very much. So a lot of you have seen some of this, so I'm going to step through fairly quickly and spend some time on some points where there were questions. My name is Andy Cottrell. I'm the co-founder and CEO of Accredited Health. We have a wearable sensor that's going to reshape chronic disease management. One of the big issues with chronic disease management is its cost. It consumes 85% of US healthcare dollars. That's because a lot of chronic disease patients experience crisis as the trigger for care, which is hugely expensive and harmful. Our sensor will give them an early warning and allow them to prevent crisis, and we do that by having access to key real-time blood biomarker information.
You're sharing
So
the
if
wrong
any of,
screen.
what's that?
You're sharing the wrong screen.
Oh, thank you, Nikki. I'm just tooling right along. I'm going to stop sharing then, and I'm going to back up. Thanks, Nick. Let's get the right one here. Where is it at? There, let's do this one. All right, so this
You're good.
this went with the chronic disease crisis version. Am I in the right one now?
Yep.
All right, great. So if you're familiar with continuous glucose monitors, this looks a lot like them. We have shamelessly copied them in order to reduce risk. Same materials, same architecture. It sends data to the phone, that sends data to the cloud. We analyze the data in the cloud and give both the patient and the care team actionable real-time information to prevent crisis and enable their care to be based on status, not based on crisis. Why can we do this and nobody else can do this? Because everybody knew this was impossible. Aptamer biosensors were short-lived, so you had glucose monitors that lasted a long time, 2 weeks. You had Aptamer sensors that lasted a couple hours. We're the only company in the world that's been able to break that wall, which is why we have a heck of a lot of patents and why we think our sensors will be able to reshape chronic disease management. How these things actually work, this is classic architecture of a continuous glucose monitor. 9 million patients around the world use this product architecture. It's a transmitter with a little microstrip that goes down into the skin, into the interstitial fluid. What we did differently is all on the microstrip. We put a different chemistry system on there. Instead of using enzymes to detect, we use DNA strands called aptamers. There's a very long list of tricks and techniques and methods that Jason Heikenfeld in his lab discovered and patented. We were the first to do it, which positions us to dominate this market segment and have first mover opportunity. In terms of our go-to-market, we're going to do it in waves. Our first wave is 3 products. Pediatric phenylketonuria is very small, but it's perfect market for us. Single biomarker, orphan condition, good FDA treatment. From there, we move into a multimorbidity status. This is for patients with multiple chronic diseases, which you can imagine are extremely expensive patients. And then we're going to go into heart failure because there's known really compelling health economics around heart failure if you can keep those patients out of the hospital. And no matter what market category you put me in, I'm happy because they all have north of 20% a year growth rates. It's a low risk decision to adopt. We're going to dive into a little bit of the value props here. For PKU, if they don't stay in range, they get permanent cognitive damage. Staying in range is hard because they mail in a finger stick test and they get results days or weeks later. So we're going to help keep these kids in range and lower the stress levels of their parents, which are astronomically high. Multimorbidity, $710 billion across these key 4 diseases. 5 to 10 million Americans have 3 of the or more of heart disease, diabetes, COPD, and kidney disease. If we can just shave a little off that 10%, that's a $30 billion a year payer savings. In terms of heart failure, of the 4 million admissions a year, up to 25% are back in the hospital within 30 days of discharge. The Strong HF study gives us the math that says we'll be able to cut that in about half and save hospitals and payers about $7 billion a year. I think most of you have met us. The take home here is both Jason and I are multi-startup. We're working with people we already know, and this team knows what it's doing. Doesn't mean we're mistake proof, but we're not going to make the kind of major stumbles that lead to sudden death. A lot of questions came up in diligence, so I just want to touch on, we are going to have an independent director join along with 1 or 2 investor directors as part of our Series Seed. And in the meantime, we have a business advisory, we have a PKU medical advisory, we have a heart failure medical advisory, both for clinical trial site PI participation and folks who don't have clinical trial sites. We are now at 3.7 million non-dilutive. We just got word that another 2.5 million looks like it's in the bag. So that's great. That bumps our total up to 6.2. With the seed money, we're going to get going and lay the groundwork for Series A with human study. That's really what our seed round's about. We have a lot of different exit options. We've raised over $1 million from strategics with no strings attached. That gives you an idea of how interested they are in our tech. In terms of more specific exit drivers, this also came up a lot yesterday. I don't know when we're going to exit. If I could predict that, I'd be retiring with Warren Buffett. But I really think the sweet spot is probably when we get the second 510K clearance, we're going to be approached. And I think we'll almost have to run a process because we'll have more than one strategic coming after us, because we have active conversations with 4 out of the 5 of our top 5 prospects for exit. And I think the timing of that is probably 2030, so about 5 years out. We think we're kind of a unique opportunity. We also, as we raise this round, have an opportunity to pick up a 2-for-1 match out of NSF up to a limit of 500,000. That helps as well.
All right, thanks, Andrew. We're kind of at time, so we're going to move over to your due diligence lead, Chris Britton. Can you join us and give your report?
Chris is not here tonight, so I am filling in for him. I am Wes Bratton, good friend of Chris's, and from the Tri-Cities area. And we have been highly impressed with the Killaley Health team all the way across the board and their technical prospects so far. They have been excellent to work with. They have been through this process before. Andrew's got 3 exits under his belt already in med tech. He knows what he's doing. It shows. The DD room was well prepared, ready for us, and it was easy to use in that. We went through a lot of critical areas, as you can see here. I'm not going to go over those in a lot of depth. They've got a lot of patent capabilities that provide a good moat. They have an excellent leadership team with Andrew and Jason, who is a great prolific biosensor innovator. And their advisory board's coming on board. That's going to help them quite a bit. Their regulatory path has been pretty well defined from day one. They're just processing their way through it, and they have some good opportunities. I think there's a second slide. So we kind of rated almost all these characteristics. Can we get this? Maybe it's the third slide. Should be.
We're going to drop that second slide.
You dropped my matrix slide. Thanks, John.
Yep.
The summary of that slide really is we had great faith in them. They rated high on almost every category we started to look at. We did have a few remaining questions. So Andrew's talked to quite a few of these during his presentation, but I'm going to give him a few minutes to chime in again on the testing process a little bit. Thanks, Andrew.
Yeah, and human testing is a key milestone for us. Typically, unlike drugs, in diagnostics, systems tend to behave in humans like they behave in pigs and rats and other test subjects. And so we think we have a pretty good handle on the size of our clinical studies and how we're going to do. And we've spoken to FDA once. We're going to be speaking to them again. But we are doing well on our timeline. We just got fresh pigs. So we're going to do some repeat testing with our new pigs trivia question. You can only keep a pig 6 months. So we feel like we're in really good shape with our phenylalanine assay for PKU. And we, right now our timeline shows first quarter 26 human testing. I think we can do better than that and be in humans yet this year for phenylalanine. So we feel very on track for that. In terms of the dependency on specific grant funding, we are not dependent on any specific grant funding. We're very happy we just got 2.5 million added to the pile, but we're still moving ahead with our $2 million seed round because there are some things grant money just isn't allowed to pay for that we still need to do in order to keep the pace. I really want to quicken the pace now that we've got our phenylalanine assay working so well. It's time to hit it and get it. And so this $2 million is that we're raising is what that's going to be all about. I think I spoke to governance a little bit during the pitch as well as the exit. But if there are other questions that anybody has, I'll be happy to field them.
I think we'll field those in the breakout room, but I think that is all the questions we had. And I just want to say it's been great working with you and your team, Andrew, and we're very impressed and think Keeley is very investable at this stage.
Thank you. The feeling is mutual. It was a very positive process.
Very good. Thank you, Wes and Andrew. We're going to go on and move on to our next company. Go ahead. Stop sharing this. And next up, we have Kadambari Bilwar with Trust Health.
Hi, everyone. Do let me know if you see my screen.
We can see it.
Perfect. Hi, everyone. My name is Kadambari Bilwar, CEO of Trust Health. Imagine waking up from your surgery, hopeful and relieved, only to realize a few weeks later something is wrong. The wound that was supposed to heal is now threatening your life. Due to rise in surgeries, millions of patients get affected and with infection. Many never see it coming until it's too late. We spend over $100 billion worth on wound, and the truth is bad outcome is preventable only if warning signs are detected early. Today's hospitals rely on manual and reactive tests, which basically means delayed detection, which leads to delayed treatment, and that can cost patients their limbs and their lives in the future. Currently, most vulnerable patients, the elderly, diabetic, malnourished, and dialysis, are the ones who suffer the most. So Trust Health is reimagining post-surgical care with AI-driven sensor fusion technology, which not only monitors and early detects, it predicts. Patients exhibit varied symptoms post-infection, allowing us to capture all the signs with our sensor fusion technology. Due to our non-invasive platform, we monitor physiological signs not visible to human eye days before symptoms appear. Our pilot with leading hospitals globally have shown the possible. Early interventions, reduce costs, reduce readmissions, and better patient outcome. Our AI system is integrating multimodal data, and we have a 93% sensitivity on our algorithm. Our business model includes existing CPT code, which allows us to reimburse $313 to monitor patients for 2 months. Our go-to-market strategy includes going through FDA this year and hiring a marketing staff company and a marketing executive, and then expanding in the United States and Asia later on, and exit with $100 million worth of revenue. Our FDA is Class 1 device, and it's going to take 6 months just because it's Class 1 non-invasive imaging technology. This is our final medical device. And the good news is we just got a lead investor and are about to close in 2 days. And the lead investor check is not included in our current round, which I have mentioned here already. We hope to use those funds primarily to get our certified medical device and continue to establish our clinical partnership and platform development and FDA. Now, we have strategic investment from company, which is a 3D printing implant company called as OIC. We have 2 US paid pilots, which are about to begin. And we have technical partners, which includes Google and Intel, and our India clinical partners as well, which basically forms the trifecta effect of clinical partners, technical partners, and strategics. We have extremely stellar team right now. We have my co-founder is Dr. Alexis Dang, and he's a chief orthopedic surgeon for United States' largest hospital, which is San Francisco Veterans Association. Together, we are all with our team of 9 people who are in India and in the United States together, we have built a stellar team. Our stellar team of advisors includes doctors from World Health Organizations, presidents of hospital systems, and also very recent hire is our regulatory advisor from Roche and Verily. Our exit strategy is multi-pronged. Just like I mentioned, the medical implant companies like OIC and Zimmer Biomet, and the other part is the wound care companies like 3M and Dexa Medica, and remote patient monitoring companies who want to expand into post-surgical monitoring and wound care monitoring, which is Tinovi. And the reasoning of exit is because that's the way the medical device market is going right now. And the key milestone is going to be FDA and MVP commercialization. To sum it up, we have 2 paid pilots pre-FDA, which basically mentions what important issue we are trying to solve. Because most patients get into readmitted and go through revision surgery, costing a lot of money to the hospital and also killing patients' time of the recovery. We are class 1 medical device, and we have been backed by, we've been top 15 medtech companies by Plug and Play. We won a pilot award, and just 2 weeks back, we were with top 6 companies, AI companies at TICON. Very recently, we got angel investment from Berkeley Angel Group as well. I want to end by saying thank you to Sudhir, Reza, and Kushal for being such strong partners with us. What we do is envision future where surgery is never followed by unexpected tragedy. The future is Trust Hub. Thank you so much, everybody, for your time.
Thanks, Kat. We're going to have Reza join you and share your due diligence findings.
All right, excellent. Thanks, Misty. Do you have the slide? Oh, perfect. All right, excellent. So we were really impressed with the technology. I think just given the amount of data that this team has been able to collect on the fact that this diagnostic device combined with their AI machine learning models is able to detect infections. And particularly it's helpful with patients that have darker skin tones, because it's very difficult to see with the naked eye redness in those cases. So the IR camera that their device has is able to generate imaging that the naked eye can't see, and that's what sort of gives this technology the ability to detect infections. So I mean, clearly the market opportunity is large. The moat, I think, is the fact that they're first out of the gate, they have first mover advantage, and certainly with an FDA approval, that'll give them a couple of years of advantage. The team we were really impressed with, and I really want to thank Kadambari for providing so much information to us in a very timely manner, putting us in touch with various folks on her team. We did speak with Dr. Alexis, who is a surgeon. He has first-hand experience with these kinds of cases and with infections. Also a technology enthusiast, and I think he's taken a great sort of personal interest in developing this technology. We also had a chance to explore in depth their machine learning models, and Kushal in particular dove pretty deep into that. The device is manufactured in the U.S., that's good news, particularly in the light of all the tariff talks these days. So we're happy about that. We did have some questions, and maybe we could spend a couple of minutes on that. One of the questions that we had was, what makes you confident that the FDA will accept data from Indian patients, since a lot of the testing is being done in India? Or are you using the Indian data?
Now, first of all, FDA for class 1 device, which we are classified, do not need any data. The reason why we have gone to India to collect data is 3 reasons. First is the number of patients we get in a shorter period is huge, clearly because of the population. The second is the infection rates in India are almost twice as much of United States. And third, the time and cost we put in to get the same amount of data and do proof of concept is less than half. And this is the whole reason we have gone to India. And even if FDA does not require any data, which basically validates. So all our data collection with India and getting different skin tones. So we've already done the diversity analysis. We have like almost more than 16% of light skin tone. There's a vast majority because of India in the medium skin tone, and then there's a darker skin tone. So we've already collected those data, which gives diversity of skin tones within our system already, which a lot of companies lack just because they're focused on the United States. And that's the reason, to just make our AI stronger and do a better proof of concept, we have gone to India. FDA does not require any sort of data for class 1.
All right, excellent. Thank you. Can you talk about your hiring plans for go-to-market leadership, particularly in the US?
Yes. Currently, we are already talking to 2 different folks. One is a marketing stack company, which is focused on healthcare medical device marketing. And second is, we are already talking to a very high-level executive, a serial entrepreneur who basically wants to be a part of Trust Health. The reason why we are waiting for a couple of months is currently we are in midst of taking care of documentation for FDA, and which is why we have Emily helping us with our FDA. Once in a couple of months, we will definitely get the marketing person hired on board, just because it takes a little bit of time to establish relationship with different hospital systems.
Understood. Thank you. And can you talk about the early conversations you've had? And by the way, the other impressive accomplishment here is the number of partnerships that you've been able to form, especially the 2 paid pilots that you're doing. Can you talk about early conversations that you're having around exit?
Perfect. And thank you so much, Rosa, for bringing such an important question. We all definitely, exit is one of the important things for investors. As you can see, we have strategic investments already from orthopedic implant company. They have invested over $250,000 in us just because they see this is a huge problem. Whenever there's implant involved, there's higher amount of surgical site infection. They could not address that problem. They invested in us. So we are leading that game. So if you notice, they put the money where the mouth is by investing in us. So those are one of the partnerships which we have already established, which can lead to exit down the line. And now, second portion I want to mention is our engagement with Innova Hospital, which is 5 hospital system in Washington, D.C., and Memorial Hermann is one of the largest hospitals in the United States. We are doing a paid pilot with them. They are paying us for our product even before we have achieved FDA, just because of the fact this is such a massive problem. And they are paying us, our discussion is $100 for first 50 patients, and then they pay us our standard amount of $313, which they've agreed upon. So we are taking steps forward.
All right, we are at time. So Reza, Kat, thank you very much.
Thank you so much, SAC team. Wonderful experience.
Fantastic. All right, next up, we've got James Hammett with Vistum Labs.
Hello, hello. Lovely to see everybody. I'm in Sweden right now, so it's almost 2:30 a.m. And I'm at a hostel, so there's lights and music. Sorry about that, but it was a very cheap hotel ticket. All right, why don't we start with the presentation? I'll put on my timer. Cool. Okay. Excellent. Okay. So a lot of you have already heard the pitch before, so I'm going to try to focus on the areas that I think are going to be most interesting for you to make a decision, form an opinion on this class. We are AI brain mapping, and the goal of our company is to enable precision neurology. What I mean by that is the ability to actually see when therapeutics are working. It might surprise you to know that there is no way of doing that right now with neurology, and it's pretty much the only field of medicine where we do not have, a feedback loop. Imagine trying to treat someone with diabetes without being able to measure their insulin levels or their blood sugar. That is what we're talking about with Alzheimer's and Parkinson's. And by the way, that's why you don't really hear about people with Alzheimer's and Parkinson's getting better. It's because we're missing the feedback loop. Now, I mentioned that diabetes is a great example of a feedback loop. Another great example is cardiac mapping. You guys might not know, even though cardiac deaths are still Sorry, was there an issue? I noticed I was muted for a second.
It was a typo. Try again. Keep going.
Okay, cool. Well, all that I was trying to say here is that even though cardiac deaths are still leading in deaths, cardiac mapping actually causes those deaths to be decreased by 60%. And that's because we finally had the ability to see what therapies were doing for the heart. You know, the heart's not a bone. The brain's not a bone. An X-ray is not how you know that the heart is getting better from a therapy. You have to see how the heart is functioning in day-to-day activities. Well, imagine if you could do that for the brain. Brain mapping will have the same impact for neurology. We're going to see people with Alzheimer's have lasting treatment, cure. Same thing for Parkinson's. Deaths to Alzheimer's and Parkinson's are also going to drop 60% or more. And so that's the powerful capability of this technology. And unfortunately, we're the only ones in the world that I'm aware of that is actually trying to work on this feedback loop with a brain mapping approach. But the good news is we have been very successful. And so with this brain mapping, we're able to create an objective feedback loop so you can see that the person's getting better. Without this, you know, it's impossible to provide effective care. You're stuck using surveys and just, you know, how are you feeling today type of things. But with brain mapping, not only can the patient get the best outcomes, but the physicians earn more and the payers spend less. So I do actually have a little bit of an example here to show you. Without brain mapping, you basically get a new therapy every year and hopefully it works. Usually it doesn't. Payers are spending on those therapies and the physicians don't earn while you're taking those therapies. With brain mapping, we fix all the problems because now patients can take multiple therapies, one at a time in a very short window. The payers save hundreds of thousands of dollars and the physician is earning every time there's a visit. I know that there's a lot of interest in, well, how does this work? It's $40,000 a year. It's registered with the FDA. People have asked, well, why are you not getting this thing, you know, full FDA approved? The answer is because this is not a diagnostic. The diagnostic market is a low value red ocean. It's crowded with products that don't work. One of the reasons they don't work is because there's not a lot of money in that space. There's not a lot of value in getting properly diagnosed. Monitoring is much more valuable. It's much more defensible and it's a blue ocean. So we're not pursuing the FDA approval because diagnostic claims are not necessary for our market. They don't impact sales and they don't impact reimbursement. But selling to physicians does allow for incredible research to be done. We've already identified a number of subtypes of Alzheimer's disease, of subtypes of Parkinson's, subtypes of Lewy body disease that have not previously been identified. And we publish these findings at top conferences, the Alzheimer's Conference, International Conference, the Alzheimer's and Parkinson's Conference, the American Academy of Neurology Conference. I mean, we are at the big places where people fight with us, debate with us. You know, our work gets peer reviewed and published in big journals. And that's why we get inbound from doctors. So we're not doing marketing. I don't have salespeople really. Doctors come to me and they tell me they want to buy, which is why we're going to be selling products in the next month. We're selling our first 5, then our next 15, then our next 30. We already have a wait list of 10 LOIs. We already have a license agreement that we're negotiating with a large scale therapeutics provider. And there's more that I could talk to you about. But we're more accurate than a PET scan, and not only do patients get better from our technology, but doctors actually earn more money too. I can tell you more about my team, but I don't know how much time I have.
You have 30 seconds.
30 seconds. All right, perfect. Well, you'll be happy to know that I have a neurologist, a practicing neurologist on my board. He's an investor. He's our chief medical officer now. And so this is a neurology product built by neurologists. We have really great neuroscientists. Per the earlier presentation of, you know, not having too many full-time people, I am the only full-time person on the company. Everybody else is a contractor. Hanul is of course working only for equity because he's a partner. But yeah, I mean, it's worth letting you know that I've done multiple startups before. I think that the stage that we're in right now, it needs to be, you know, contract labor because we're just getting up with sales. Once we have the sales going, then I can offer people some nice contracts that are full-time. But yeah, there's nothing else to say other than we've already raised most of our $1 million rounds. We've raised 700,000 of it. So if there's interest here, if you guys would like to participate in the closing of the rounds, that's certainly welcome. We'll be in revenue in less than 30 days.
Great, thanks, James. We're going to invite Joss to join you and talk a little about the due diligence.
Thank you, Joss. Thank you, Missy.
James, can you drop your slide? James, drop your slide. Thank you.
All right, thank you very much. So we had a great time doing the due diligence with this team. This is a extremely interesting technology. Unfortunately, the market is very large. It is growing. The market right now is mostly Alzheimer, with options to expand to other brain pathologies. James mentioned Parkinson, but it could go to Lewy body disease, ALS, and more. So this product provides a novel option to physicians around speed, convenience, price, low price, repeatability in a market that does nothing of that. Everything is complicated, everything is expensive, everything takes a long time, and this will adequately supplement the current offering. The value proposition is simple. It's a $40,000 subscription for access for 1 year to the tool and unlimited use of the tool. This is a SaaS-like business, which has very favorable financial dynamics because the payment is received upfront. That generates a negative cash cycle, which will help this team fund its own growth. And it's also a fairly high margin business. The team has demonstrated strong operational drive, and we've been very impressed by what they've achieved so far. In terms of exit, the potential for an AI-driven neurodiagnostic tool or neurodiagnostic tool is very rich. There's been numerous acquisitions of companies that can be tuck-ins to largest players. And now I'm going to ask James a couple questions. So James, you talked about the FDA and the fact that you're not pursuing a diagnostic FDA approval. One side question about that is, how will you prevent your customers from using the product as a diagnostic tool? And because if many of the customers use the product off-label that way, there is a risk that it will trigger FDA scrutiny.
Yeah, that's a good question. And honestly, that's a situation that we hope to encounter. I know that sounds a little crazy. We don't want to play games with the FDA. But what I mean by hope to encounter is that, we're managing our risk. All of our contracts, all of our marketing material, it has very clear disclaimers, very clear limitations of use, very clear explanation of what off-label use is. And of course, the doctor is responsible for, how they use the product when they're using it off-label, because, they're not using it appropriately. But the reason I said that I was excited for that is because I actually do want doctors to be asking me, hey, can't we use this for diagnostics? This product seems amazing. Every time I use it, it seems like it has diagnostic capabilities. And what that creates is it creates a pull effect from the market where we're not pushing a diagnostic device on everybody. Instead, it's the doctors themselves who are asking for this diagnostic. And then we can make an intelligent decision in the future on whether or not to invest in that direction or not. But having those doctors be asking for that also means that those doctors have now accumulated evidence suggesting that it is diagnostically capable. And so we can lean on that evidence to make this process a lot faster. Once again, if we go down that route. But so that's my answer to this question.
Okay, thank you very much. And then can you give us a brief update on the ongoing studies you're currently pursuing?
Yeah, of course. So we actually have already collected the first 15 patients. Something that kind of surprises me is that we don't have the PET scan results on the patients yet. We'll have those next week. But we were able to anticipate what those results will be. Again, we don't have the results, so we can't do a comparison. But I showed those results to the sites, to the clinical sites, and the site knows the patient, right? We don't know who the patient is. We don't know anything about the patient. We only know the data. And so we shared our initial predictions, and we were very happy to see that even with just 10 patients, the site suggested that our predictions are accurate based on which patient was more severe with the disease and which patient was less severe with the disease. So the study is going really well. There's a real possibility that we'll be fully done with FDA verification by the end of the month, which is my number one goal, because I want to start making sales.
Good. And then last question.
Actually, we're out of time, so we're going to have to wrap it up there. So thank you very much, Josh, James. Thank you.
Thank you, Josh. Thank you, Mr.
All right. Congratulations again to all the finalists, and thank you for all your hard work to everybody who served on due diligence teams. That is the last of the presentations that we're going to see for today. And before we go to final deliberations, we're going to jump over for just a minute and share a little bit about the next cycle. So I want to introduce Vinay, who will be the fund manager for SAC 28. Vinay, you want to take it over from here?
Sure. So everybody, this is Vinay. I'm currently the SAC 27 SPV assistant lead, helping Sudhir and Prashant. So like these folks discussed, our goal is to sort of bring in investors in and around US to help startups around the Pacific Northwest and typically US as well. So while we are working on SAC 27 and we are in the final stages, I, along with a couple of other folks, are already working on SAC 28. So we're working hard to make sure SAC 28 is a success, like we have SAC 27. So if anybody is interested in learning more about SAC, learn about my experience, or in general are curious about what it involves, becoming part of an SAC, more than happy to have a chat and set some time up. We also have a form that is available for everybody who's interested in exploring SAC further. So I'll link it in the chat section so that you can probably input your information. Happy to have a chat with anybody who's interested in becoming part of SAC and SAC 28.
Thanks, Vinay. And I know that if they're not already in the chat, I'll be dropping them in the chat here in just a minute. Next up, I want to take a quick minute and invite Sudhir back up to share a little bit about the SPV engine and the finalist fund. Sudhir?
All right. Thank you, Misty. I think I heard Jessie is also in the line. Maybe you can pull her in as well while we talk about this. Can you go to the next slide, please?
I think I should click the link.
All right, thank you. All right, thanks everyone. Hello, Sudhir here again, and we have Jessie is here as well to talk about a couple of infrastructure updates that John, Jessie, and myself, we have been working for the last couple months. First of all, SPV engine. For those who are a part of SAC previously, we have been through multiple engines so far, through Carta and Waban and many other things. What we are trying to build is basically trying to build an SPV structure in-house, right? So that will give us a lot more scalability in terms of for every cohort that we build, for finalist fund, and various other SPVs that we create as part of the SAC. And the second one I would like to talk about is a finalist fund. So as we see, there have been we have 6 great companies present, right? And as part of the SAC cohort, we have only one winner, right? So what we are trying to do here is basically create a new fund targeted at investing SAC cohort finalist companies, right? So the idea is to take 3 to 4 companies from this finalist set of companies, which are deemed investable and which have been highly recommended by the investors, and enable a fund for any SAC community, part of the SAC community to invest. If you want to learn more about it, Jesse will talk a little bit more on that.
Yeah, hi everyone. I was the fund organizer for SAC 26 and currently participating as a sponsor for SAC 27. And like Sudhir mentioned, we have fantastic companies that enter the finalist round for each SAC cohort, but there is only one winner, right? So we've heard we have organized the sidecars in the past to invest in some of these finalists that are not winners. So our attempt is to create these mini funds that are aligned with each SAC cohort. So for this one, we are currently raising capital for the SAC 27 finalist fund. The deadline, if you're interested in joining us, the deadline is June the 30th. There's a QR code up on this slide if you're interested, or you can find me or Sudhir on Slack, through email, or through John. And although we are, we call this a finalist fund, it doesn't necessarily mean that we're going to invest in every single finalist. The winner is definitely going to be included, but there might be some finalist companies that just don't that may or may not make the final cut. So it's up to me and Sudhir to make the final call. We're currently targeting end of next week to have a clear idea of how many, which are the finalists that are going to be funded through this fund. The expected sort of estimated check size for each company, for each deal, is 100,000 and above. Of course, that depends on how many investors that we're going to be able to recruit into the round. So yeah, so let us know if you're interested.
And Jesse and I will be in the breakout room, finalist fund, if you'd like to learn more about it.
Fantastic. What an exciting idea. All right, thank you very much. All right, so at this time, we are going to invite our investors to go to final deliberations to make their very difficult decision based on what I've seen today, who will become the winner of SAC 27. While our investors, so John, you're gonna go ahead and take that group now and go and do that?
Yeah, I'm gonna step out, and you've got the whole control, and we'll go in the other room.
All right, so we will be investors in a little while. And while our investors deliberate, we have a few things planned, including a short break. But first, I'd like to share a little about other angel conferences that are supported by John and the Mossy Ventures group. So in addition to SAC, they have a couple of sister organizations, the Transatlantic Conference, the Trans-Pacific Conference, and you can learn more about those on the website. I think there's links all the way across all of those sites. Overall, when we think about this, an angel conference is to activate angel investors. So we do that by using this learning by doing method. So accredited investors join as a group. They work together to sort through, in this case, more than 150 deals every year. And they work to elevate the companies until they reach a point we are today. So every cycle, SAC creates a new LLC, which is the company that actually holds the investment. Investors become a member of the fund, and each one of them contributes some money into the fund. So they do it by purchasing the units. All of that money is pooled, and then they work together to choose the company that will receive the investment. So we will find out who they choose for SAC 27 in just a little while. But then you can expect that the investors are going to continue to support the companies in a whole variety of ways going forward. So even if your company doesn't come out the winner, you can still expect follow-up phone calls, additional support. They've developed relationships with you, and they're pretty invested in your success. So we know there's no guarantees on the return, but we do hope the winner do well and produce a really good return for our investors. And for SAC, this process happens once a year. The next program that we'll run under Benai will happen during the fall. So I just want to those couple of things out there. For those of us in the room, I may have to figure out how to do this. Those of us left in the room, the SAC resources, I don't think that's going to give us the link. Oh, I had something I could have put there. So for those of us left in the room is an audience choice award. And I think I've got to jump over to another screen to grab that link unless Martha's here and she can put that link in the chat. Martha probably went with the investors. And with that, we're going to open the breakout room so you can keep, so what we'd like you to do is I will find the link and put it in the chat. I know I've got it. And then you can go in rooms and meet the different finalists, have a little quick conversation with them. You can move around in those breakout rooms, and then please vote for your audience choice because that'll get announced before we announce the winner in hopefully not too long from now, next half hour or so. Any questions? All right. I will find that voting link. All right, link to the form is in the chat. You can go ahead and open that and jump around to the breakout rooms and chat with anybody that you would like before you make a decision.
Ding.
All right, welcome back. It is good to see all of your happy faces again. We've got important things to do. So our audiences had the opportunity to meet with the founders, and we did some voting of our own over here and can't wait to see what's been decided going forward. So with that, I'm going to hand it back over to John.
Look at me doing all of this stuff on my screen here. All right. Thanks very much. What I would like to do is to bring Sudhir and Prashant up, and they can announce the winner.
Are you going to do your audience choice first?
Oh, yes, I should do that, shouldn't I? I'm still going to bring Sudhir and Prashant up. All right. So you, Misty, did an audience vote, and I'm hoping you updated the slide. And the winner of that is, next slide.
It's not going to be updated. I waited for you to do that. But I do know what the answer is.
That's good. Nice to know that somebody did.
Let's see. I'm not going to get it updated, but I'm going to tell you who it is. So the winner of the Audience Choice Award is Inya Biosciences.
There you go. Yay, Inya.
Yay. Woo! Good job.
Yeah, let's go find Dragona. So everybody liked your pitch, and the audience that was not the investors liked what you were doing. Yay. We really appreciate that. Sadly, that doesn't come with cash, but congratulations.
Thank you.
Yes. Now I'm going to take you off stage for a second, and then we're going to share the screen, and we're going to see the investor one. Is that what's happening? Misty still there?
I'm still here. Did it advance?
Share. No, the screen stopped sharing.
All right. So
Yeah. So Sudhir and Prashant, which one of you wants to say who the winner is and who tell us just a little bit about the experience of watching that happen?
So I can start. So it doesn't happen many times where the audience vote and the investors vote match, right? And this time it did happen. So congratulations to Inya, who actually did win the investor vote too. And it was a lot of debate and between top two companies at least to go back and forth. And we had the arguments both the ways, and finally had the Inya winner. So congratulations, Inya team. Prashant, anything to add?
Congratulations to the Inya team. Congratulations to all the finalists who participated. But we had to choose one winner, and the votes counted based on all of the investors coming in together. So today it was Inya, but we wish all the other companies the best as well.
Cool. So everybody just sit still for a moment while I figure out how to use my take a picture thing.
Can I, in the meantime, say thank you so much? And can we bring up the rest of my team who actually has been here with us all day long? This is such a great honor to receive this award from all of you. Thank you so much. It's been a pleasure working with the entire due diligence team, and they really have made us a better company following this due diligence. And we are so excited to really strengthen those human results that are about to start. And we can't wait to bring you on board and have you be a part of this incredible journey with us. So thank you so much. And I also would like to say to the other companies that we were a part of a different SEC event, IBAP, and there's always the sidecar opportunities. So don't give up, and please keep fighting for the investments.
+1 on that Dragon.
Cool. So can you stop sharing the slide for a little bit? Yeah, lovely. So I would like to get a picture of this too. Sorry, I have to be doing all this tech things behind the scenes. And I'm clearly unprepared to do it fast. So anything that you want to share with India while we were talking about them, reasons that perhaps we like them? No.
Anna, you should take it away.
Yeah. Dragana and team, we've been so impressed with you throughout the entire process. It's been wonderful to see the passion that your team has. Clearly, you have brought around you an excellent team of advisors, and we really believe in the product that you're doing. We believe in the impact that it will have on a population that really needs what you're offering. And we really believe that you also have developed a really strong business model to support that. And to bring it to a really strong exit. And so we're excited to be a part of this. We're really excited to see the results of your human trials, and really felt like this is a good time for us to be able to come alongside this company in early stages and see those results come to fruition to make a significant impact on the community of people that needs this the most. So thank you for letting us be a part of your journey. It's been really exciting to see all that you have worked so hard on so far, and we're excited to see you continue that journey.
Thanks so very much, folks. I really appreciate that. Can you share the slides again, Misty? So next slide. So it's really important for us to run this thing to get help from our community. And we have a bunch of sponsors that help us do that. Let's go through them really quickly so you know. Holland and Knight is the new home for our lawyer, Adam Matherly. He was here during the breakout room at the beginning. I don't see him here at the moment. He helps us with our agreements and reviewing our processes. Next. Synthesis has helped us with the website, does work in training people on how to do better marketing out into the world. Next. Innovari has been helping us with our LinkedIn and communications processes. Next. And our sponsored accountant is Z Counting. They have programs that I'm going to send out to everybody who's a member. I also have just recently become a member of the Notion thing, and I'll be sending out a link for everybody for the Notion as well. Next. Thanks for coming. Can you drop the slides, please? I really appreciate you all being here. This is really an ongoing thing that has been doing significant things for our community. I hope that you will tell people about whatever you experienced here and let them know about everything we're doing. Our biggest problem is 99% of the people that have the financial means to angel invest don't know that they should be doing it. And so you are the people that could tell them about all of this. Some of you might have questions you want to ask other people that were in the room. So I'm going to open up the breakout rooms. I'm glad to hang out for a while you're doing things. I'm happy to have you congratulate the winner, whatever. Thank you again for coming, and hopefully you'll come to San Diego and to Transatlantic as well. Thanks, everyone.
Thank you.
Thank you.
Thanks, John.
Thanks so much.
Thanks,
Thank you,
John.
guys.
Good luck,
Thank you,
everybody.
John.